You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. It's 12/2/21. Hard to believe this year is just about shot. It's an interesting date, 12/2/21. It's the same frontwards and backwards. I think that's called a palindrome if it were a word. I don't know what you call it on a number, but the whole market seems to be like a palindrome. You turn it around and it looks same, regardless what the Fed's doing, tapering, creating money like there's no tomorrow, which with the Fed there probably isn't. So we figured we would connect with our good friend Jeff Clark. You know him well. Jeff, you're senior analyst, goldsilver.com. It's great to have you back. So what is going on in this market? I mean, every commodity has blasted off except gold and silver. Arguably, you could say they did in, I guess, around April of last year through gold's peak in August. But pretty much we've been doing this sideways consolidation, up, down, up, down. What's your take on things?
Well, it's great to be back with you, Kerry. So thanks for having me. Yeah, that's obviously a fair question, and the question of the day or the question of the year, right? Literally everything else is going up except gold and silver. So, obviously what that makes people ask what is going on, and I've asked that myself too, because they should be going up, right? This is the kind of environment that's really ideal for them. So I've told this story before, but I was at a conference last year, and well, actually it was last year, but it was right before COVID hit real bad in the US, and I got the chance to go to dinner with a bunch of hedge fund guys that were there checking out mining stocks at the time. And I got into a conversation with them, and then the whole table got involved. And what I learned from that conversation is a lot of them basically said the same thing. Look, we have to dance while the music's playing, meaning they have to remain in the stock market. They have to perform every quarter, just like a company does, right? And that's what's going up was the stock market. And then real estate was going up. The crypto market was going up. That's where the action was, in their words. And so that's where they had to be. They had to show performance to their clients. Gold and silver were not going up. They had a great bounce last year, but then it softened and has been flat to down since. But they're going to go where the music's playing right now, right or wrong, good or bad. That's what's happening. And it isn't the retail person who really controls this market. It isn't retail buying. It's going to be institutional buying and central bank buying and things like that. So I think, you know what? And that actually tells us when this thing might turn around, right? It's when the stock market becomes weak again and is no longer providing good returns, whether that's a crash or just a plain old bear market, right? When real estate goes soft again and commercial real estate isn't really generating lots of returns. If we go into another recession, if the crypto market craters in some way. So I think those are the kinds of things that will compel the mainstream investor to come back into our sector. And given the environment, given the setup that we have right now, I think that could be quite a fun day for those of us who are long in gold and silver.
Yeah, well, we've been watching this. This is like the equivalent of watching paint dry. When we look, we've never seen money printing at the scope, the extent of what it is now. Trillions and trillions with no possible return back to sanity, because the deficits are going to be running trillions of dollars for years to come. And we got rates close to zero. So pretty much if you're buying a house, according to our good friend John Williams' shadow stats, inflation's raging at 14%. You could buy a house with a government subsidized mortgage at 3%. Therefore, you've got a negative 11% real rate of interest on your mortgage. Effectively, you are getting paid to sit with that house, and you got to live someplace. So when you got enticements like that, and then I read a statistic that in the past year, more money went into the stock market than in the past 20 years combined.
Yeah.
Those types of things. And then you realize that everybody who got money from the government didn't, maybe they bought their cars or attempted to, but probably couldn't buy them because they're not available. New cars, very difficult to obtain. So instead, hey, put the money in the market and let it grow. I've used this quote so many times from Will Rogers: invest in inflation. It's the only thing going up, except precious metal.
Right.
In battery metals, copper, lithium. I mean, you name it. Oil, energy, even though they took a slam a couple of days ago, all we need is some cold weather and that'll turn around really quick. Nat gas was the darling. It was up over 130%. That's come back. And copper hit its all-time high. All these commodities blow up and then they pull back, consolidate, and then we're ready for the next run up. I just wonder where gold and silver are going to fit into that whole cycle.
Well, in the big picture, we still have the 3Ds, let's call them: debt, deficit spending, and dilution, devaluation of the currency, right? So you have a lot of fake stuff going on out there. You have a lot of bloated investments out there, a lot of bloated markets, fake economy, fake currency. So in the big picture, that tells me I need to be long and remain in gold and silver until that changes. In the short term, what I think is going to probably spike their prices, and when we do reverse and start the next leg up, and there will be another leg up in gold and silver. History is very clear about this. It happens repeatedly. It goes in cycles, just like commodities and things like that. There will be another leg up. My concern is that the next leg up could be almost bigger than I want it to be because of just how bad the setup is here. Deficit spending that's the biggest in U.S. history, debt levels that exceed on a per GDP basis World War II levels. You have all this currency printing that you've been talking about. And you're right. They're kind of in a corner. They have to do that. They can't not do it. That's their solution now these days, right? So all of this tells me that the day for gold and silver is going to come. It almost has to. It's 1 degree short of inevitable, in my opinion. And when it comes, it could be something to behold.
Yeah, for sure. Hey, well, I'm hoping that they keep printing money at least long enough for me to get my first Social Security check, distribute checks, and for me to go get all the surgery I've been putting off till I qualify for Medicare in 8 months. But
okay. You're giving away your age there.
Yeah, well, hey, I'm pretty transparent about it. I'm a lot younger than I am, so I can deal with it. But you know what I'm saying here? This is like we're living in this bizarro land where
exactly
where value is the opposite of value. The more speculative something is, the higher the value is. The more hard proven value something is, the less valuable it is.
Right.
It really is a bizarro land.
And think about what's happening right now, but sort of behind the scenes out there. It's not really behind the scenes, but nobody in the mainstream is talking about it. And that is the amount of buying that's coming into the gold sector. You have central banks that are still net buyers. In fact, the World Gold Council just put out a report, I believe it was last month, that said the buying by central banks this year is 39% higher than its trailing 5-year average. This year, after COVID, after we've started to reopen again, they're buying more now than they have the past 5 years. You have, was Singapore, right? They just bought. Ireland, first time in 20 years, Ireland just bought. Thailand, Hungary, Brazil.
Poland.
So,
Poland, yes.
Poland. And then on top of that, you have our parent company at Gold Silver caters to institutional investors. So they were making outbound calls for years trying to get institutional investors interested in buying gold. And they wouldn't take their calls. 1 out of 10 would take their calls. And of the ones that did, 1 out of 10 would invest. It was a hard sell. And yet for the past year, they've been taking inbound calls. In other words, institutional investors are calling them wanting to get exposure to gold. All of this is happening without big, splashy headlines in the mainstream, So I think all these entities see a important need to own gold right now. I'm going to follow suit because I agree with them.
Yes, for sure. Could not agree with you more. Obviously, we're preaching to the choir here. As far as the mining sector, so obviously the majors are just printing money. They really are a beneficiary of inflation, and their costs up until this bout of inflation had really come down dramatically. Hopefully, they hedged some of them. But when you look at where things are headed in the sector, the juniors and the mid-tier companies, well, the mid-tier probably going to get mostly bought out by the majors at this point. Their share prices are so beaten up. Maybe it takes a round of M&A to really push this thing forward.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
It easily could, and I think M&A is going to happen either way. It has to, because the majors have to replace ounces. So, and that process of them replacing ounces on their own was slowed down by COVID. So it's going to be a lot easier for them, quicker and efficient, and arguably cheaper for them just to go out and buy the ounces. And so there's going to be M&A. You look at all the other factors that are involved. The number of deposits being discovered is down. The average grade is down. Those that are in attractive jurisdictions are down. So, M&A, in my opinion, is going to happen. And I think those people, those investors that own some quality juniors and quality small producers, quality mid-tier producers, are going to have some happy days ahead, because the majors are going to have to buy them out. They have to replace ounces. Think about, the major that produces 1 million ounces a year, they have to replace 1 million ounces a year just to stay even. So, if they want to grow, they got to buy 2 million ounces. So the real attractive deposits out there, those are the ones that you want to hold, because that seems to be a trend that's going to take place, really kick into high gear here at some point, and it's probably going to last at least several years.
And it's really like that in virtually every commodity that you dig out of the ground. They're being depleted. Copper is a perfect example. 12 to 20 years to build a new major mine.
Right.
We've got this glorious electrified future ahead of us. If only we can find the copper, cobalt, nickel, and lithium to keep it going. We have policies, and this is why I love the commodity sector so much, energy as well, because we've got government policies restricting supply at the same time that you have government policies expanding demand. That is a recipe for way, way higher prices. And it reminds me back many years ago, before the anti-smoking campaign really took place. I don't smoke, haven't smoked for 40 years, but in the one hand, you had the government saying, don't smoke this stuff, it will kill you. And then in a building across Washington, you had Department of Agriculture subsidizing the tobacco producers to put out more. And then you had all these people suing the tobacco companies to guarantee that the prices were going up. And look, I wouldn't invest in tobacco companies. That's just my own personal thing. but I don't have anything against anybody who does. But these are some of the wealthiest companies in the world. I see this being repeated. These crazy,
and smoking hasn't slowed down.
it's gone down, but the price has gone up so much faster. Like, hey, Jeff, you're old enough to remember the days when a slice of pizza was 25 cents, right?
Yeah, and bubble gum was a penny.
Yeah, and a pack of cigarettes was 25 cents. I remember this because my parents smoked, and I used to have to go to the darn cigarette machine, which they don't have anymore, and throw a quarter in. And then in New Jersey, they put in a state sales tax and had to throw in another penny. Now in New Jersey, New York, it's $10 a pack. But my point is, they've restricted it, done everything, and then these tobacco settlements and the bonds and everything. But my point is that when you have government policies, countervailing government policies that encourage consumption and discourage production at the very same time, and this isn't just a U.S. phenomena, right? Isn't this a global phenomena?
Yeah, it really is. And where that ties into the mining sector is with silver, obviously, but they're putting in a lot of policies that, the infrastructure bill and all this, the green energy stuff, all that stuff takes metals to do. And that means mining. So the demand for metals from mining is only going to go up. And that's not a short-term trend. That's at least an intermediate to a long-term trend. So, this is the right place to be, I think, for the foreseeable future. Let's put it that way.
Yeah. So, and when you look at, I'm doing a quick Google search. Sorry, I didn't mean to be distracted, but I wanted to come up with this number. Supposedly there's 1,000 grams of silver used in a Tesla. I don't think that's right, but that's what they're saying.
So EVs, it's about 50 grams, but in an ICE vehicle, internal combustion engine is about half that. So the point there is that it takes almost twice as much silver to produce or manufacture an EV as an ICE vehicle. So the demand for silver for that and other metals that you're talking about there is only going to go up. So if you want to go green, you're going to go silver by default.
Okay, and then in a Tesla, there's 180 pounds of copper in every vehicle, right? Every vehicle. So, and then it takes 12 to 20 years to build a new mine. There probably are 24 major world-class deposits, tier 1 deposits out there that will eventually be developed. I mean, I can think of a couple in Alaska, up in Canada, but they're going through this regulatory process. And not to mention the scientific and financial processes to get these things eventually built. But it's like you just can't speed it up. If they were really serious about our electrified future, they would be pushing these copper projects around the world like guns to the, pedal to the metal. But they've never made the connection, the policymakers. In fact, they made the opposite connection. Well, rather than belaboring the point is we're investing in goods, in metals that by their very nature are being pushed into shortage. And that.
Yeah, right. And that's that's a simple supply demand, right? You have supply that's going down and demand that's going up, and that those two trends are in place. They're entrenched almost. They're structural, you could say, and that's not going to change very soon. So I really am bullish on the whole commodity sector, especially gold and silver. Uranium too is another one that has a major supply demand imbalance, and you have politicians wanting to go green now, and they are increasingly acknowledging that uranium is a way to go, or nuclear energy is a way to go. So all these things are I think, good long-term investments. Yeah.
Yeah, you said that wrong, Jeff. It's nuclear.
Oh, what did I say?
Nuclear, like our former president, one of our former.
Oh, right.
Not nuclear. I can't even say nuclear anymore without laughing. But yeah, look, uranium is definitely one of those metals that is going to be in short supply. Good friend Eric Sprott is making that more of a reality by the day.
Yes.
And, yeah. So like to ignore this sector and not to mention the inflation, like you said, the debasement of the dollar, which just adds gasoline to the fire, really. So
Right.
So
Yeah, the uranium market is a bull market now. Silver and gold is consolidating on pause, however you want to put it. But that'll probably be the next big bull market. But the uranium one's happening now. So, unless there's a major nuclear accident or a major meltdown on the stock market where stocks crash 50% in a week or something, that is a great place to be. I'm very long in the uranium sector. Let's put it that way.
Yeah. Good move there. Well, I think we covered the bases here. I think the argument for our sector, for resources, as well as energy, because we're going to be using oil for the next 2 decades, 3 decades at least, prodigious amounts, ever increasing amounts, as well as other fossil fuels. I think the argument's in place and the thesis for much higher prices also in place. So, Jeff, where is the best place to find your work these days? I know you're on Twitter, The Gold Advisor. Where else should we reach out to you?
Yeah, I'm on Twitter at The Gold Advisor. And basically what I've done on Twitter is I agreed when I got on to disclose my personal buys. So if anyone's interested, the mining stocks that I buy and when I buy gold and silver, for that matter, is all disclosed there. But most of my time is spent, writing and researching exclusively for Mike Maloney at goldsilver.com. I really enjoy working with him. It's a blast. If you haven't seen his Hidden Secrets of Money series, that's great. And then I occasionally also write for Silver Chartist. So it's silverchartistadvisor.com. If anyone's interested in there, right on company fundamentals there of mining stocks.
All right. Excellent. And we'll have a link to your site on Financial Survival Network on the show notes of this interview. Make sure you sign up for your free newsletters. If you got a question for Jeff, please shoot us an email to kl@kerrylutz.com. We'll make sure you get an answer. Jeff, always a pleasure. Thanks so much for dropping by.
Yeah, great to be here, Kerry. Let's do it again soon.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.